Hartmut, in a lot of ways, other than the inflation debate, it feels like we're still trading around the same themes that we've been talking about all this year and most of last year. Is 2022 going to be any different, and what new trading dynamics do you see?
Yeah, different in the sense that we had this year very, very high GDP growth all along, very low base effects. We will still have them with us in the first half of next year, but it will be a year of two halves. So the second half of next year will already be sort of more normal. In other words, you could also say slower. And that also, I think, argues for market performance being a bit slower, not necessarily negative, not at all, we think, in fact, but certainly what we've seen the last 18 months, difficult to repeat. Also, what we are hoping certainly to see, or more and more believe it's possible to see, is also, of course, China is for us the big market in the region. The sort of tail end of the very sometimes harsh regulations, and when that happens, you see some re-rating that we haven't had in the last 12 months. So that could be another topic here in the region.
Do you see that recovery in China? We had the Nasdaq Golden Dragon Index rebounding, really the best day in 4 months after what has been a very steep sell-off there. Is there going to be consistent upside when it comes to trading in Chinese names?
Well, that's really going to be consistent in the next couple of weeks. I think the debate is still raging on two fronts. One is the macro front in China, as we know. It will probably take another one, probably even 2 quarters, for the bottom to really form. On the other hand, certainly positive for any market in this situation would be that they're arguably the only big economy in the world that is ever so slightly, but anyway, easing when everybody else goes the other way. So that should work in favor. And if we then we don't get any really big, massive regulation, if it's really true that most of it we've seen in the first half or mid this year, then there is potential for a re-rating in China.
I want to ask you briefly about Japan for a moment, Hartmut. We're just hearing that NHK is reporting that the government may be preparing to up its growth assessment to 3% for the Japanese economy. We also had some very positive comments from the Prime Minister earlier today, suggesting that wage distribution and his plans for that will actually work. Does Japan get out of the environment that it's been stuck in for the last decade?
Well, at least technically, I would say it's quite interesting, and it is a market that has lagged quite a bit now in this year. We're getting a stimulus pack that is bigger than many market observers thought, and on top of that, we finally. And that was a big issue also for the Japanese markets in our view at the beginning of this year. The low vaccination rates are now higher than most other places in the world. So we think the scene is set, along with a further weakening, and I should say, is set for Japan to catch up. So it could, at least technically, whether it lasts for a decade, we can argue, but technically over 6-12 months, we should see catch up and upside.
And of course, we had minutes from the October BOJ meeting just out a few moments ago. One member is still concerned about international commodity prices and saying that it would be appropriate to keep the COVID program in some way. How much more support will the Japanese economy need, particularly given the weakness now in the yen?
Actually, the yen is actually, in that sense, supportive, and I mean, the stimulus we think is fine. As a matter of fact, perhaps we have a different view than the colleagues over there at the BOJ, but a little bit more inflation would probably not be a bad thing for Japan. Although we're cautious that it's really going to be anywhere close to what it is in the rest of the world.